I am so excited to be here. We have been planning this for a few months and the day has finally arrived. And, when Linnea and I and the team were thinking about what to do for hopefully one of our final virtual events, we thought it would be great to do a conversation about fellow women and colleagues and peers in our ecosystem. And we thought, well, how do we want to approach that? And we decided that we wanted to bring, to show kind of what Gingerbread does. We do direct investments in female founded and gender diverse teams, but we're also LPs in funds that have women GPs or underrepresented minority GPs. And so we wanted to showcase that full ecosystem of both firms where we are LPs in, as well as funds where we're not an LP in, but we've co-invested in. And so we couldn't think of a greater group than to bring together Linnea in conversation with Teresa and Beth. This is going to be a great conversation just to do an arc of careers, digging into how we, by existing, the four of us in this frame, we are changing the face of what venture looks like. And let's dig right into it and get started. So, the venture industry, it's notoriously hard to break into, whether as a founder or as an investor. And I'd like to kick it off by hearing from each of you, what was your aha moment when you knew you wanted to become a VC? And then the thing that we always get asked a lot is, how did you actually go about breaking into the industry? And then thinking about today versus when you came into the industry, how is it similar or different? So Teresa, let's start with you, and then we'll go Beth and Linnea.
Thanks for having me, Ida. It's a pleasure to be here with all of you. Let's see. So when did I know that I wanted to do venture? It was actually a little bit accidental in the sense that I started out as an entrepreneur. So I joined some Stanford Business School classmates right at the time of raising their seed round. And I stayed with them as one of the co-founders, helped raise several rounds of venture capital. So I loved being an entrepreneur, and I really enjoyed that. And how I ended up on the dark side, as we call it, was actually about 3-4 years into it. We were in the middle of having our third CEO in less than 12 months. And I was young in my career. I didn't know a whole lot, but I sort of had a sense that probably was not going to be great for my early exercise stock options, but I loved being an entrepreneur. So I went to one of the VCs on my board and I said, hey, I'll stay for as long as you want, but I would really love to do this again. Like, do you have any other companies, or even they're not funded yet, like just, a product idea and maybe they need a co-founder and I'll help write the business plan and raise capital. And he actually said to me, well, he knew my background, and this was 98, 99, long time ago. But people were raising bigger funds and looking to hire more people because it was sort of the first wave of the internet. He knew I'd had this time being an entrepreneur, raising venture capital, and before that, have an MBA and an engineering degree. And he said, you know what? He's like, I'll introduce you to 3 companies, but I'm also going to introduce you to 3 other funds that I know are raising much bigger funds and are looking to hire people. So that was really how I got to this side of the table, and also how I broke in, which I think speaks to the importance of allies, statistically speaking, male allies, who are willing to introduce you to people, whether that's for funding or for an investing role at a venture capital firm. So that's really the story of how it happened. And the short answer is, things have changed a lot. We still have a ways to go. I won't put a downer by sharing with people some of the numbers, but I will say that at least now it's changed dramatically in the last 20 years, but most particularly, I would say in the last 4 to 5 years, where having a diverse set of investors as an investing firm like Gingerbread or like Acrew and others is now seen as an advantage by most people because if you come with operating or investing expertise and you also bring a different perspective to the cap table or to the boardroom, increasingly founders and CEOs are looking for that more and more these days. And that has been quite a positive and dramatic shift in the last several years.
Couldn't agree more. Absolutely.
Well, hello, everyone, and thank you, Ida and Linnea, for having me. My path was a little different. I was sitting in investment banking in the high yield group. And a lot of the companies that we were working with were sort of older, generally troubled industrial or other companies along those lines, and were great businesses, but just weren't that exciting. The growth was sort of very steady, or the management teams were generally tired. And one of the last deals I worked on was a very unusual company, and this is going to date me. It was an ISP in St. Louis, Missouri in 1998. And they were like the first management team that was excited, and they were ready to build and take on the world. And I was like, I came out of that. They sort of shipped me out there to help them with their business plan and build their financial model. I was like, this is the kind of company I need to work with. So I came back and I was sitting in New York, and New York at the time, had a very nascent tech community at the time. And I came back and I'm like, I'm going to work at one of these companies. And so went and looked for every single startup in New York City. And in that process, found a firm called Flatiron Partners, and sent them on the internet. I think I must have been dialing on my Earthlink account, and sent them a blind cover letter. And when you think about long-term allies, I was very fortunate. I wrote it to Jared Colonna, who now runs Reboot, if you don't know that organization. And he saw, one, I think what I wrote, but two, on my resume, I had proficient in Spanish and Portuguese, and they had just done Star Media. And he's like, most people don't even know that those are two different languages. Like, that's amazing. So he came in. They were not looking for junior people. They did not hire me at first. He said, this is great. We'll figure out something. I'm sure there's one of our companies. And I just kept figuring out ways to get in front of them for about 6 months until they ended up hiring me. So that's how, it's a little different story of how to break in. But then I also had a front row seat for the dot-com boom and the dot-com crash. So that was pretty formative. Then I ended up leaving venture. We ended up getting absorbed by our sole limited partner. I sat there. When you talk about not a lot of people that look like you, that at that firm, there wasn't a whole lot of people that looked like me. Ended up going to business school, and then came out and was an operator for almost a decade. And then, made my way back in 2015.
Yep, a different journey each way. And Linnea?
Yeah, so my epiphany happened much later in life. So I spent about 28 years on Wall Street, and was a technology investment banker, working in an advisory capacity. And it just dawned on me that I had never written a check to a private company. And I saw everybody doing this throughout my entire career. And we all hear the stories, oh, I put $10,000 into this and now it's worth $1 million. And those stories do happen, but there's a lot of the flip side of those stories as well. So and so I started thinking about how I had just invested my own personal capital. I also had taken on a role at Goldman Sachs, where I was doing a lot of work around gender diversity, and just was a big believer that if you have to have decision makers in the right capacity. And so the first thing I looked at was, where are all the women? So Teresa was one of my first phone calls. We barely knew each other at the time, and I'm like, hey, you've been doing this for a while, like, could you? So she brought me way up the curve. I became an LP in her fund, and then I just started looking, and this was just before the Me Too movement, and just saw that the problem was there not being a complete ecosystem. I did not see it as a pipeline problem. I was seeing a lot of great companies that were founded by women, but what I wasn't seeing is enough people like Beth and Teresa at the table. And so I'm a big believer, if you see a problem, be a part of the solution, not part of the problem. And I was in a fortunate position to be able to make some investments, and so started dabbling in investing, and then we decided to make it a thing. And so I hired Ida, and I'll just say, for those people that are dialing in that maybe don't want to sit there and look at a bunch of pitch decks or whatever. Being an LP in several funds is a good strategy around this. And also, pick something that you love. It doesn't have to be a big formal thing. There's plenty of opportunities to invest at a lot of different levels. And I'm sure we'll talk about, some of the ways that Beth and Teresa have been going after that. So it's just great to have Teresa, who was my first phone call, and Beth, who we now have two co-investments in at Firstmark. So the ecosystem works when you put women in decision-making roles. They will work together, and they will support the companies that they're invested in.
And I love that. I mean, we as a group represent the different pathways into venture. And that reminded me, I wanted to do a quick poll about who's in our audience, because when I was looking at the registrants, we saw a mix of operators, investors, and founders. So I'm going to just launch this quick poll. Take a moment. How do you primarily view yourself? And I know people wear multiple hats, but I'd love to understand who are the primary, when you think of like the thing that I think of myself first, how do I view it? So I'll give it as I thought, it's a mix on this call. Really interesting. We've got a lot of investors on. I'm going to give it 5 more seconds and I'm going to end it, share results. So we've got primarily investors, we've got founders, and we've got operators. And that's exactly, what I loved about this was that in each of us, we reflect that as well. And so, thinking about where you are today, let's kind of shift to today kind of moment. It was a pivotal moment where you had to make some major decisions on the trajectory of your own careers and had major inflection points. Teresa, you could have been a lifer at one of the biggest Silicon Valley firms, but after 15 years, you decided to go out on your own. What made you think to do that? What was that kind of catalyst moment for you?
Yeah, I think to sum it up, I think at some point in your career, in your life, you realize that you are willing to take a bet. I mean, we're in the business of investing, so we're in the business of doing homework and all of that. But at the end of the day, our job is to take calculated risks where we think, based on our analysis, we're going to get outsized reward for that risk. And the interesting thing, at least for me, and I don't know, maybe it sounds like a little bit maybe for Linnea, because it was later in her career journey too, when she decided to get into the direct investing side, I realized that, maybe the best calculated risk that I could take was betting on myself. And that is something that I hear often from entrepreneurs. And to your point about being at a great big platform, it's a great platform. You're not running away from it. It's just that you're somehow called to doing this thing. It's the analogy I would give is, when you see a team coming out of a Google or a Facebook, obviously they're great big platforms, still tons of growth going on there. And you talk to the founders and they're like, I loved it. I learned a lot, but through what I was doing, I saw that there was this white space, this opportunity, right? This market that I knew about that wasn't being served. And for me, like, venture is great. I have great relationships, co-investments with my former partners at Excel and with several of you on this call and probably some in the audience. And I love that part of the business. And I guess I'd been in it long enough that I thought that at that moment in time, in 2014, that there was an opportunity for a group that was more focused at that point in, being in the early stage, right? Since then, my firm has evolved and we now have added another vehicle, which I could talk about later. But the point is, that was what the venture business was like in 98 and 99 when Beth and I entered the business, mostly focused on US early stage. The firms, for lots of good reasons, just like the Wall Street banks did, became much larger, much more international, much more multi-stage. But I still really liked the early part, like hanging out with the entrepreneur when he or she or they are still just trying to figure out the early product market fit. And I thought that there was still an interest and a need in the market for that. I will say that at the time, people noted that it was unusual to have a woman-founded firm. I didn't really think about that. Honestly, in 2014, I thought about it as neither an advantage nor a detriment. It's who I am. And now increasingly look smarter than I was at the time. There was also a need for that. There's an increasing desire to have different perspectives. People have seen the data about diverse boards and diverse management teams, making better decisions from the Google study, and then better return on equity from the McKinsey study. So that part of it, happy accident of, you wait around 20 years, you wait around long enough, what your viewpoint starts to become something that people seek out. So that was really it. Just kind of couldn't stop thinking about it and was like, you know what? It's not so risky. Let's just take a bet. Maybe it'll work out. Maybe I can get some great people like Linnea to give me some money and let me invest on my own. And it's worked out, but it seems scary at the time, but I'm just here to tell the audience, like, if you really want to do something, like, think about we're here to figure out what the value of assets are. Who knows the value of your own asset? Then you know better than anybody else. So if you're willing to take a bet on yourself, I think other people will too.
I love that. Yeah, we tell our founders all the time, you've got to bet on yourself. So funders and VCs do the same thing when they take that path. And what I love about the trio here is that we have the counter story. Beth, you had the kind of the opposite experience where you helped launch WME's venture arm, but then you decided to go and join an existing firm and platform. How did you think about that when you were thinking about your decision point and inflection points?
Yeah, I mean, I'll back up a little bit. So I was a career switcher. So even though I had worked in venture early in my career, I'd spent a decade building my operational resume and was a senior leader at a couple companies in New York. And when I was sort of thinking on like what would I do next, I actually was talking to a whole bunch of venture firms who were like, wow, like you have operating experience and venture, this is great. But none of those conversations went anywhere. So I'd have in some cases 11 interviews, multiple partner dinners, and like nothing sort of converted. And I had this opportunity that came up with to partner with WME, and sort of a similar thought process. And this was back in 2014, where it was less cool to hire women. I was like, look, like they're going to invest half the capital in this fund. We'll see if we can raise the other half, and then we'll start to build a track record and sort of prove that we could actually do this, be an actual investor in the space. And it turned out to be great for me because it did exactly that. It proved that we could build something, that we could make good investments, and ultimately, hopefully, because it's still somewhat early days, start to realize it, but lots of great markups. In that process, one of the funds that I've known my entire career and had co-invested, back the first time around was FirstMark. And I'm sitting in New York, and FirstMark is, one of the biggest firms here. And I knew the partners really well. And, we came to this point where it was like, okay, well, I'm sitting here with a corporate. This has been great. What does it look like for the next 10 years? And there was a whole bunch of things on their side. So, thinking about going public and all kinds of other stuff that would have potentially put some bumps in the road on that front. And I had known these guys so well that it was sort of a natural choice to go and continue, if I was going to stay in the venture world, like build my career over the next 10 years with FirstMark. So that was the sort of path and reasoning behind it. But it was more difficult than I thought to sort of leave something that you built to join forces with something bigger.
I mean, I think it just reflects that there is no one path, and that it's not always easy to just crack the code, and that it's the resilience, and when you know what you want, going after it and figuring out the angles that eventually leads to the right fit for you, and thinking about it in that kind of 10-year horizon, because that's how these funds look at it. So I think that's really, really interesting. And I mean, Linnea, we have a different model in you, in that with launching GDC after your 28 years on Wall Street, you've started a new path of what we're seeing arise in, which is the family office venture fund. What do you think is driving that growth behind it, and what attracted you to do it in that manner?
Yeah, it's shocking because I'm usually a late adopter to shoes and fashion and everything. And so I was an early adopter to this family office concept. And I think it's been out there for a while, but somewhat dominated by mega family offices that had full-blown, asset management, either companies or their own entities that invested their assets. I think one of the most exciting things that will continue to drive diversification of investment is that there continues to be, and there will be, a massive wealth transfer. So there's a significant amount of our US wealth held in the hands of very small number of people that just happens to be predominantly male. With wealth transfers, that will move to laws of nature, 50-50 men and women. And what I see is when we started Gingerbread Capital, I started getting phone calls from very large families saying, hey, we have or family offices saying, we have a family member that is interested in exclusively investing with women. We have a family member that's interested in investing in women's health or education. And so being able to help them connect the dots. And so I always say women know women. And so that was actually has been a really fun thing, is to see those introductions result either in direct investments into companies. So I think we're just at the very nascent point of family office wealth transfer. And I think the other thing is that our younger generations are much more interested in doing things that have some element of impact, not necessarily classic impact investing, but I do believe that when you invest with women, there's always some story or motivation or passion that sits behind it that does well for our society. And it could just be making a lot of money and putting that money back into the ecosystem, or it could be creating a company that's good for the earth, good for female employees, good for our healthcare system. And we're just seeing that more and more. So I'm super excited because I do think there's a lot of lane switching going on now. And the other driver of family office investing is people don't want to just invest in the traditional asset classes. So there's a lot of lane jumping. Classic investors are jumping their own lanes, and family offices and other investors are breaking their own rules of where they see investing. And I mean, Teresa, you've done that with your latest fund, which I think is really, gives people like us an opportunity to invest. So.
Absolutely. And Loretta, you just teed up, because I wanted to switch into the actual investment mode, question in the Q&A. And Loretta asks, it is sometimes said that the presence of women as partners in VC increases the likelihood that women entrepreneurs are funded. Do you think that is true? And if so, why? I'll go in reverse here, given that, Gingerbread, we exclusively invest in firms that have female founders and gender diverse team. Linnea, give your perspective, and then we'll go to these two that do not have that kind of gender mandate, and hear from them about their perspective.
Yeah, so I get asked, one of my favorite questions I get asked is, aren't you afraid you're going to miss some great deal, some great company that's started by a guy? And I will just say I am unapologetically focused on women. And I may miss something, but I'm going to gain a lot of other things on the other side. The other thing is, I remember in my first meeting with Teresa, she does not have a gender focus, but she was one of our very first women VCs. And a good percentage, I want to say it's 30+% of her founders are women. And so I learned this just doing a lot of recruiting when I was at Goldman Sachs. If you put women in that decision room, more women got hired, and without a mandate to hire more women. And people identify with themselves. And I identify, when I'm looking at founders, I have to see something that either reminds me of myself or you, Ita, or or a business that I've seen. And so the female experience is just really, really important. We're just seeing this in spades. And so I I am unapologetically focused on women, but I do think more women decision makers will be the key to changing the statistics of number of women and the volume of women, the volume of investment in women founders.
Absolutely. Beth?
So I definitely believe this. If we look at my portfolio at WME, so we had 2 women and a guy in an underrepresented minority group. 50% of our investments were led by women or underrepresented minorities, and we did not have the mandate. So I do believe that it matters, and I think there's a couple of reasons for that. I think one is this concept in venture pattern recognition, and you sort of see like so many people believe that there are certain things that you need to be successful. I joke it's either you're like 20 years old male in a hoodie, or you're like pushing 50, white guy in a blue button down shirt, and those two like get funded all day long. I mean, that's changing, but I think like when you think about what it takes to build a business, how you think about product market fit, those are the things that I think that it might be harder for someone who might not have the same exposure. The other piece is that if there's no women, if there's no women on your website, you might not believe that they'll understand your business, especially if you've had a hard time raising. And First Mark did not have a ton of female founders in our portfolio before I got there, and it's increasing. And it's not just me investing; it's my partners investing in women. So I think there is definitely something for that. But I think also it's making sure that you are targeting the people and the firms that are more likely to invest, so that they care about your segment, they care about the types of businesses, they understand it, so that you have a real partner on the other side.
Absolutely. And I mean, I think, Teresa, what you've done it from just physically being in the game for as long as you have, but I think what you've done with your recent fund, which I'd love for you to tell more about, is kind of raising that bar even more so. So I'd love to have you tell everybody a little bit more about what you're doing now.
Thanks, Ida. Just briefly, what I would say is I agree 100% with what both Linnea and Beth said. So it turns out that our portfolio is, depending on the fund, between 40 and 50% women and or underrepresented minority founders. And we don't have a lens the way Gingerbread does, but it's because of, usually there is a way that you get referred into, or that we get connected to entrepreneurs and teams that we're trying to connect to. And human nature is, if more than half of your team are female, or it's like Beth's experience at we're just gonna know people that look a little different than the firms, which it's getting a little bit better, but I think it used to be 2/3. I think it's like 60+% of venture capital firms have 0 women investors. So it's still the vast majority. Anyway, so that's why it happens, right? It's because, we are very thematically focused. People look for somebody who's a fintech expert, and my partner Lauren, did the Series A in Chime, or somebody who does a lot of security stuff, which I've done. But then it's also going to be like, well, how are you going to get connected to that partner or that firm? And so I believe if the investing team looks more representative of the population and the population we would like to fund and back, that will come. Not as clearly and swiftly as you and Linnea have done, but it does happen. And so briefly, we recently launched our first growth stage fund. So we've been doing early and growth stage since 2015. So this is our 4th set of funds. Out of the very thematic, and I'll just take fintech as an example. So the idea is, we invest in companies at the seed and the A, sometimes alongside Gingerbread or others. And eventually these companies, they get to what's called growth stage, and they're 1 to 2 to 3 years away from thinking about being a public company, which Linnea can tell you a lot more about than I can. But, and it turns out that when you're very thematically oriented, increasingly these companies at that stage, and this is why it's called the Diversify Capital Fund, they are actually looking, that's when you're trying to add independent board members. And places like Linnea's old firm, Goldman Sachs, state of California, maybe soon, people are starting to mandate that boards of public companies ought to be more diverse, both along gender and ethnic lines. So it's very much a time when companies are thinking about adding to their network of potential board members, advisors, and executives, because they're usually growing quite rapidly at that stage. So we thought, it came to us actually because of some of our companies that had gotten to that stage, and whether we were the biggest investor or the smallest investor, somehow they would come to us and be like, hey, we're starting to think about independent board members. Like, do you have any referrals for us? And the reason why they weren't asking their other great venture investors is like, they wanted people who didn't look like the other people who were already on their board. So it felt like, okay, we can double down on the themes that we know, both for our existing companies, but also new companies, because we had friends, new companies coming to us from security companies or fintech or consumer internet companies saying like, hey, we're getting ready to go public. We really need some diverse board members. You got any referrals for us? And we were like, well, but how do we explain this to our LPs? Like, it's like, wait, we should keep them in the portfolio. So we created a vehicle that's a growth stage. In some ways, it looks like an opportunity fund or a growth fund that many groups have, but very specifically with a diversity focus in a few different ways. We believe it creates a triple bottom line. Number one, our investor base is by definition diverse. And thank you for several of you who I know are on here who are individual investors. So alongside our institutional capital, 70% of our fund, and our fund is going to be the largest diversity fund in the business by a pretty good margin. 70% of our capital comes from diverse individuals, so women or people of color. We have over 250 individual investors who usually don't get asked to be investors in venture funds. Almost 60% of them said this was their first investment in a venture fund. And what I'm really proud of is that almost 50% of those individuals identify as underrepresented minorities, and over 60% identify as female. So this is in a time when people say there aren't enough diverse investors. We were able to find, 150 plus. And so the triple bottom line is, number one, the companies, we get into these growth stage companies. We're not trying to lead, not trying to outdo Coatue. We're trying to get co-investment 5 to 15 million. And why they want our capital, these over a dozen companies, why they make room or increase the size of their round is because they know with one check, they instantly diversify their cap table. And they get access to these amazing people like Linnea and Ita, who themselves might raise their hand to be an advisor or a board member, but also can refer other great people. So they're broadening their recruiting pipeline, which pretty much every CEO I ever talked to is like, that's their number one job. I'm sure Beth can say the same from her operating days. So that's the benefit, right? So outstanding, first one, better returns to our investors because we're getting into some of the most oversubscribed, hardest to get into deals because we're offering something different. The second is, as I said before, we think that there's plenty of data that shows that these companies will perform better if they do have more diverse boards, management teams, and investor bases as they get ready to be public companies. And the third one is what Linnea was saying, which is, by increasing the access to capital, and there's no question that venture capital-backed companies are the 5 largest companies in market cap in the world. And the people who usually get access to those investments while they're still private don't look like any of the 4 of us. And we're trying to change that in our small way, because then what we know is these individuals, if we can help create wealth for them, they can choose to either become angel investors, maybe through a single family office or just as an individual angel, and or invest philanthropically. And humans invest in people that they know, whether that's to make money as an angel investor or as a philanthropist. So we believe we're, in our small way, beginning to turn that cycle around. And I'm just going to give the last stat. That's all the good stuff. Why do we look so different? Well, all of us on this call and all of our male people of color GP friends today in the US control only 1.1% of all the private assets that are managed. And that's 73 trillion in assets. It's about 1%. So we're making small change. We're trying to change that number.
I love that. And, I do this for a day. My day job is making these investments. But when I read about what you were doing and looked at, I knew that I, as an individual, wanted to be a part of that story. And I also think that it speaks to having women of a certain, like, that have had the expertise, that have had the success and the track record that you've had. You have to get to a point that you have had and just forget that you're a woman's success, but then to take that level to open the door to bring individuals along. That's the kind of thing that becomes a game changer, and raising the largest of its kind in the business. Those are the kinds of headlines we need more of. And I think that's what makes it so striking. And I know I'm personally very excited about what you're doing and excited to be a part of that journey. So thank you for what you're doing with that. We've got, about 5 more minutes. I want to ask one more question from kind of our bucket before I go to the last Q&A. There's a lot of people that want to get on your radar. Like, what are the themes that you're investing in right now? And how do people actually, what's going to cut through the noise to say, hey, I want to take a meeting. I want to see the deck from each of you. Linnea?
Sorry, my dog is crashing this call, so please pardon him.
Scruffy's always welcome.
No, exactly. So look, we don't have any specific industries that we focus exclusively on, but we do a tremendous amount in consumer, in tech, B2B, marketplaces. I would say I'm very focused on mental health. I'm very passionate about that, and I would love to find several things in mental health, and in particular, helping teens and children around mental health. I'm involved philanthropically in that, and that's something I care deeply about. And I think, and it's an industry that is ripe for disintermediation and technological advancement. We also love women's health, and we've made several investments recently in just creating better solutions. It's just staggering that most of women's health solutions were initially created by men, and women know how to treat women. And so that is certainly something we are focused on. We love creative solutions in the B2B space. And I think that that's been a super fun area to look at. And it's funny, I always think, like, aren't we done yet? Haven't we created everything we need in the workforce? And then a founder will come in with this amazing idea, and we just made one of those investments, and it's like, oh, like, I can totally understand why we need this. And I would just tell people that the warm introduction, when I get an introduction from a Beth or a Teresa or from someone that I know, Goldman Sachs, those people are out there that are willing to make those introductions. So I want everyone on this call to think about 3 introductions that they can make for someone else, and take that as our homework, our collective homework assignment. Most of our investments come from just having an ecosystem of people that we're talking to. And we do, however, we do take, inbounds from our website, but if you're a founder and looking to tap into a particular VC, one, do your homework on what they've invested in before and have a reason why it's a good fit for them. Don't rely on someone else to connect the dots for you. Connect the dots for them, do the work for them, and look for someone who can make that intro, even if it's not the highest level person. Our younger team members are charged with finding great companies, so make them a hero, and don't feel like, oh my gosh, if I don't get that inbound into Linnea, it's not going to work. If you get to Olivia Kim on our team and she likes you, that's pretty good. So
absolutely. Beth?
Yeah, I love that. I was an associate of fun, and you definitely want to utilize the associates for sure. So I look at a lot of consumer and marketplace companies based on my experience at Etsy and Fab, but I've been spending increasingly more time over the last 1.5 years on supply chain generally. So from making products to shipping products, supporting all of that stuff and the e-com infrastructure. We just did a warehouse software deal. So spending more time on that. So, trying to lean in on the experiences I had, particularly in Fab, where we were building our own warehouse management systems and creating products and making products and all the pain points. And I think it's also a moment where COVID put a lot of pressure. So a lot of the solutions that people were thinking about before that may have not had buyers, now the buyers are really waking up on what they need. And I'd say from the standpoint of getting to me, I think it's being pretty clear on why so if you don't have the warm introduction, and I'd say the only people I would add is my founders. Like, I will generally take every meeting that my founders, introduce me to, is being really crisp on the why, because I definitely do take cold intros or cold emails and meet with companies, particularly if they're relevant to the areas that I'm looking at.
Awesome. Teresa?
Well, in the interest of time, and also because I feel like I've been speaking a lot, I 100% agree with everything Linnea said, particularly the part about like Beth, I too started out as an associate, so special love for that. And I agree with Beth as well that if you can't get a warm introduction, then do the homework, right? Like, so I won't go over it. Like, our themes that A-Crew's proactively interested in are on our website. The one small one that I will add, because it's a little bit buried inside the community activated, as well as some of the data interconnected, is we've increasingly been doing quite a bit in crypto, more in sort of blockchain enablement, security, those types of things, but increasingly into some NFT oriented investments. So that might be the one thing that doesn't come out, but great advice, 100%. What Linnea and Beth said, I would have said the same thing.
Awesome. Let's go back to one of our Q&A here. So Allison asks, so often there's a criteria to be on boards that you have to have been on a board before. For funds, to be a fund manager, you have to have managed a fund. How do we get people who are talented and capable beyond these barriers? This is a real challenge for women. Thoughts, anybody? Feel free to take that.
I'm happy to start briefly. So
please do.
On the getting on boards, part of what we're doing for our DCF founding equity partners and community is we know that that's of great interest. About a third already are on boards, but another third believe they're ready to be on boards. So through things that are either in partnership with groups like the Board List, Stanford Women on Boards, we're trying to connect our community with programming. And I've even done this in a couple of cases for some of my portfolio CEOs who are interested in getting ready to serve on public boards. So there are a bunch of great programs out there. I won't go into all of them now, but they're out there. And then also, if you're interested in this specifically, you don't have to be an investor in A-Crew to join our community. We are having some great board readiness and how to do a board resume webinars and training programs. We had a great woman, Dambisa, who wrote a book about how boards really work as a speaker. The second thing about how do you get a track record if you want to be a fund manager? If you have the capital, angel invest, because those are your investments. Can't get more real than your own money. And build a track record, show that you can find the deals and make the investments. If you don't have a ton of capital to invest, but you are a talented operator like Beth or others, selectively advise companies, because that's also how you're showing, whether it's capital or your personal time, those are very precious resources. Show that you can get access to the right companies and that you can pick the right ones to choose with your very precious resources. I think those are both great ways to build up a track record before managing someone else's fund.
Fantastic answer. Very comprehensive. Either of you want to add anything on it? But
I think Teresa covered it. It's great.
I would also just give a shout out to Him for Her, which is another organization that focuses on placing women and diversity onto private boards. And so honestly, if I were going to choose a board to go on, I'd want to go on a private board that's going to go public. And so I'll make sure that gets sent as follow-up. We'll send some resources around as follow-up to the group.
Absolutely. And Extraordinary Women on Boards too is another great. So there's some great organization, and All Raise has launched a great one. So I think now is the time when especially women thinking about board leadership. There's some really good organizations out there working on this. So hopefully that code will continue to be cracked. Let's do a couple more. Okay. Karen asks, as an LP, I often observe VCs, both male and female, operating under the belief that if a startup is truly an outsized opportunity, they find it through their network instead of using an open pipeline model. To what extent is this true, especially for women and BIPOC-led companies? Alternatively, are there any VCs who have been successful in consistently using an open application process? Thoughts?
I think it's a matter of time allocation and resources. It's just really hard to do a full open audition for most firms. So it really goes back to what we were talking about before of like being very targeted around how you're coming into the firm. And if you can't get that warm intro, how do you position yourself and your company to match, who's on the other side?
I would say the accelerators are probably the most sort of like they get a lot of applicants and see a lot of companies. And so if you're really early stage, because we do look at a lot of companies that come out of YC and 500 startups, and we've invested in some where that was their kind of first opportunity. And so I find that to be a pretty efficient way. Now, not everybody loves kind of the capital trade-off that goes with that, because they do take a chunk. But I would certainly say that's one way. But I agree with Beth. It's I would love to say we would look at the entire portfolio. We cheat because we only look at women, and so we skim the cream off the top. But I would just say that even in a kind of level pipeline model, I would still work very hard to find that warm intro.
And you'd be shocked, like clearly it says that we're focused on female founders and gender. We definitely still get those bold men that lob in the like, I started this company. I go to the website, I look, I was like, where's there the women? There's no woman. But somehow they're like, maybe this is going to be the one time. So, be bold like some of your male counterparts can do. Christy asks a good one. A trend I've noticed with a lot of career forward women is that they have an entire army of support around them at home, especially if they have children, particularly in their partner. Can you give some insights into how you've crafted support in your personal life to empower you professionally? I think that's always the question of that balance for female women in the workplace. So love thoughts that you guys have on this question. And Linnea, you oversaw the women's network at Goldman. I think you've got a good insight to start off with.
Yeah, so I mean, this is something I sometimes I hate the balance question, because there is no such thing as like finding true balance. But the best piece of advice I got, thankfully, somewhat early in my career, but probably too late. You can ask my son. Is just don't try and be an A student you can't get an A at everything every day. So there were definitely days I was a C+ mom and an A or A- investment banker, and there were plenty of days where I was, at least tried to be an A+ mom and was a C- investment banker. When you're, traveling across the world, you're not at your kids' school. I loved, there was just a wonderful saying that, they always say behind every man stands a great woman. And I say behind every woman stands an army of women that helped her get there. And so whether it's my own mother, your sisters, your colleagues at work, just reaching out, a 65-year-old man will not be able to advise you on what to do for your maternity leave or when to have children. So bring the answers to work with you, bring the answers to your own firm with you, tell people what you need, because for too long we've been trying to do networking as a solution, and we need grassroots. And so that's one of the things I'm super excited about. We've got a lot of model breaking going on, and so we have to address it at that very basic layer. And my advice to Chrissy is just don't try and do everything yourself. It's okay to have someone help your kid with math, because I couldn't do it. And so, let yourself off the hook a little bit.
And let's be clear, math changed. I don't know how to do math now. Like math isn't what we learned. All right, so I'm going to close it with the last question, which is 10-year. We like to think in 10-year horizons. What are we hoping? What is one thing that you're hoping to see 10 years from now that's different than what is today in our venture ecosystem?
I mean, I'll throw this out there. I mean, I'm hoping that these cap tables are at least 50% women in 10 years. And, starting from the earliest stages of angels getting, and I love, Teresa, your access question, because it's like, there's a lot of talk around, well, women don't write checks, but they need that, you need the access to these companies, and that there's enough female venture capitalists that we're writing, significant number of checks, not the numbers that we're at today.
Agreed. Linnea?
I would just say I agree. More women writing checks. Everyone should take a look at, just their own wealth distribution. Don't bet your kids' college education on a venture fund or an angel investment. But I sort of use the 10% rule, that 10% of your wealth should go into relatively high risk, high reward types of investments, and make sure that you're kind of doing your part. And I loved the piece of advice, like being an advisor. So I'm watching the wealth transfer really closely, because I think it's super exciting. And I think so 10 years from now, I would love just to see cap tables looking different. And I would love to see some significant movement in the percentage of venture funding that goes towards women.
Awesome. And Teresa?
So very consistent with Beth and Linnea. I would like to see a 10x increase in the dollars going to women or people of color founded VC-backed companies, and a 10x increase in the dollars going to women and people of color funds. So 10x in 10 years sounds pretty bold. But when you know that those percentages of dollars today are between 1% and 2% for both of those categories, both for founders and for funders, I thought that maybe it wasn't bold enough, but I was like 10x in 10 years, we think that's pretty good for any of our companies. So let's keep it real.
We love that. And we'll hope for a future where panels looking like this aren't an anomaly and like shockingly diverse, but will become more commonplace. And with that, I am going to, Jeannie, I'm bringing you back on. We're wrapping this up. We couldn't get to every question. There were lots of great ones, but we hope you enjoyed this conversation. We'll have it recorded and have it available to attendees who weren't able to join us. But, I knew I would enjoy this conversation, and I hope you all did too. Jeannie, any final parting thoughts?
Terrific panel. I have been getting messages from folks from all over saying, oh my gosh, we are enjoying this so much inspiration. Thank you to Beth and Teresa for joining us today. Linnea, Ida, as always, asking the pertinent questions and keeping the conversation flowing. I think we're all inspired. As Ida mentioned, we will be posting this on our YouTube channel, our blog on the Ginger Bread website, our Ginger Snaps blog. We will also put it out there on our LinkedIn page. And if you're not following us on LinkedIn, please do. We're always posting news about us and about what's going on in the industry. Thank you to everyone for joining us. It's been fantastic.
Thank you so much, everyone. Have a great day.
Okay, take care, everybody.